So, what are the top stocks to watch for this upcoming week? What's going on, guys? It's Ricky with TechBud Solutions. Hope that you guys are all having an amazing weekend. So, today it is Sunday, February 16th, 7:10 p.m. here in Arizona. But I quickly wanted to chat about, what's to come this week, what to look out for, especially because a lot of different stocks popped up or gapped up last week. So I feel like with that, I'm going to be paying close attention to not just, companies that reported earnings last week that might potentially either begin to recover if they aggressively sold off. I think that's a really big focus of mine lately. But also if stocks gapped up and became very overbought because of good earnings, does that hype fade? And once it does, will that stock retrace? And is there money to be made on shorting it? Something to look out for, right? So let's go ahead and just dive right into it. So I wanted to talk about a few of the companies that are going to be reporting this week, just to make sure that you have a kind of understanding of what to look out for. So if I'm not mistaken, the stock market will be closed tomorrow in observance to President's Day. That's going to be February 17th, Monday. So unfortunately, markets are closed tomorrow, so there won't be any live trading session tomorrow. But then starting Tuesday, we will be going live. If you want to tune on in, that's going to be that second link in the description down below. You can sign up and watch me trade live as soon as Tuesday. With that being said, on Tuesday, there's not huge companies that I personally care too much about what they are reporting. There is a company that I'm going to be looking out for on Wednesday. It's Carvana. And the reason that I'm so focused on Carvana is I'm not too sure if you guys have seen its performance lately. Carvana, the reason I became a little bit more aware of it is I've always been in that car space, but also Carvana was originated here from Arizona, right? I think the guy that owns it and his dad are the wealthiest people in Arizona, especially when it was trading at $376 per share. I want to remind you that this thing peaked during pandemic conditions, and then once that began to fade, when we went into 2022, the thing really began to sell off and things went bad very quick. It went from $376 down to $3.55. I mean, it was so bad that it looked like Carvana wasn't going to make it. Now it went from $3.55 all the way to highs of $285. So there's a lot of hype, a lot of attention. And if you paid attention to Carvana and the way that it's trading very quickly, you guys can pull up its PE ratio. Now, I know a lot of you guys don't care about PE ratios. I respect that. It's not for everyone, but I just like to highlight it. This thing is trading at 2,000 times its earnings. So this company has a revenue of $12.55 billion with a net income of $45 million. Now, the really wild thing about this is that, again, this thing sits at a market cap of $59 billion, but it produces revenue of $45 million. Net income of the company, $45 million. Yet again, it's worth $59.2 billion. So can this stock continue to skyrocket? Of course. What would cause it to stop? Why would it stop now, right? There's a lot of hype. There's a lot of attention. The thing that I do want to bring, and this is why I'm talking about it, is because it is going to report earnings. And if earnings look good and guidance looks good for 2025, the hype and the meme can continue. It genuinely feels like almost a meme play. It does have pullback potential because it showed that when it hit highs of $263, it quickly retraced to lows of $181. That is a 30% sell-off. A 30% sell-off is nearly losing 1/3 of your value. And it did that in just a number of days. So does Carvana have the possibility or the potential to aggressively sell off? Yes, it has shown us in its history that it does. But again, it quickly recovered and it's incredibly bullish. So the reason I like to talk about both sides is this is an incredibly bullish stock that went from $3.55 to $286. It reports earnings this Wednesday after the market closes. I think this is going to be one of the ones I want to pay the most attention to on Wednesday after the market closes. I don't like to trade earnings and like to guess of, hey, I think it's going to go up, it's going to go down. It's too late for me, right? I didn't buy it at $3. I didn't buy it at $100. For me to buy it now to, even if it does go up, That's the thing that I feel like a lot of beginners, and even myself in the past, kind of like I got into the trap of. It's kind of like people buying Bitcoin right now at $100,000 per coin. Don't get me wrong. Can Bitcoin continue to make new highs? Yes. But it simply, in my opinion, isn't worth the risk. Kind of like Carvana right now. It's trading at all-time highs at $285 per share. Let's say that it even runs 20%, right? A crazy scenario. Let's say that it gaps up. The hype continues. It runs up 20%. Oh my God, I can make 20%. Great. What's the downside risk? Well, the downside risk is that it came from $3. And there's so much downside risk. So that is why, in my opinion, when something is this overbought, this overvalued, it's not that I want to trade against it. It just simply means that I want to respect how bullish it is, but I can respect it from afar. I don't have to buy at these overvaluations because there's a lot of hype behind the stock. Because we know ultimately, just because it's shown us in the past, the hype eventually fades and it quickly corrects itself. So I think it's important to understand that you don't have to pay a premium just because everyone else is, right? But again, it's not that you can't. If you want to buy into this because you think it's about to skyrocket, be my guest. You're an adult. You can do whatever it is that you want. I will never try to convince you otherwise. But for me, if I simply say, okay, hey, can this thing possibly run up to 300? Yeah, sure, possibly. Just as much as it could possibly sell off to lows of 180. And because of that, right, the risk to reward is not worth it for me. But a lot of traders don't always take risk to reward into consideration. They're just like, F it. Let's just go for it, right? It's bullish. The hype is going to continue. Let's just go for it. Risk it for the biscuit. And I get that too, right? If that's the way that you want to approach your trading journey, I'm not here to convince you that you shouldn't. I'm just here to make you aware of, well, if it doesn't go according to plan, this is how much money you could lose. And as an adult, if you acknowledge that and you're okay with that, then again, you've earned everything that follows after. If it succeeds, congratulations. If it fails, then again, that's the position that you chose to put yourself in. So I think Carvana is going to be a very crucial play this week. And a lot of people are going to be talking about it, either if it skyrockets and makes new highs, or if it comes tumbling down. So it's going to be very interesting to see. Another one, again, Etsy, Toast, also very popular companies. Block, also very popular. Rivian and Walmart, Alibaba. Rivian is one that I do want to pay attention to, but man, this thing is a struggle bus. Like, I originally thought Rivian was going to be one of the main competitors for Tesla, just because it seemed like it kind of had its thing figured out with its partnership with Amazon and all of that stuff. And it kind of looks like a Hail Mary right now, right? Where it's trading at $14 per share. It's been forming lower highs and lower lows. I mean, fundamentally, if I'm not mistaken, it's been losing more money recently than it has in its past. Its P ratio is negative 2.6 times its earnings. It loses $5.5 billion. And this is years. Again, don't get me wrong. Like, I know Tesla was in a very similar position, and Tesla was able to reap the benefit of being subsidized by government programs. But supposedly these government programs might be going away. And at that point, it would make these companies, I mean, is it a ticking time bomb? Like, what if the Trump administration does get rid of all these subsidies that pay EV companies or credit EV buyers when they purchase an EV vehicle? At that point, there's less of an incentive. Also, these EV companies don't get compensated. And it's like, okay, at that point, are things going to get significantly worse before they even get better? So when it comes down to earnings, again, this just hasn't been the best performing stock. We can pull it up here as well. The last earnings, it did increase by 9%, but then there's been so many times, earnings after earnings after earnings after earnings after earnings, that it experienced a negative catalyst. Again, there are a few times that it is green, but as you guys could see, quarter after quarter after quarter, it just continues and continues to fall apart. And when looking at something like Rivian, it continuously makes lower highs and lower lows. there is the chance that it just might exceed expectation. But based off of what we saw fundamentally for Tesla, it didn't look like they had a strong 2025 in its forecast. So again, this is just the guesstimate because that's all I can do. If Tesla, the world leader, at least the United States leader in EV vehicles, is maybe having a weaker 2025 than what was expected, I can't imagine Rivian exceeding those expectations. But again, Rivian is its own company. It might have something under its sleeve. And if you want to take that chance, that is on you. But I thought that I would bring it to your attention. It's set to report earnings this Thursday after the market closes. So let's see. We making money tomorrow? My apologies. Tuesday. I know. Stock market's closed tomorrow. So in observance to President's Day, the stock market will be closed. So please make sure that you are aware of that. I wanted to ask you guys a few questions because today I made a video about an oversold stock. I also wanted to make a video about 3 of the most overvalued stocks that I've come across for 2025. And overvalued or overhyped up within a short period of time doesn't mean that it has to fall apart anytime soon. But the companies that I wanted to bring up is Palantir, obviously. Palantir is one that has been incredibly bullish. And again, it's one that I've been smoked on so many times, again, because it's so incredibly bullish that it doesn't make sense to short it, especially when direction is so incredibly bullish. But ever since it reported earnings, it's been on this bull run. It's kind of slowing down, but the market's been on this uptick. And as long as the market continues to thrive, it gives Palantir the environment and condition to thrive as well. So Palantir, incredibly bullish, but of course, incredibly overbought within a short period of time. I would say it's a very similar approach to Carvana. Carvana is an incredibly bullish company that's been making people a lot of money who bought in early. But now, is it worth paying or buying it at a premium? In my opinion, it's not worth the risk, right? What's the profit potential? What's the risk potential? But just because it doesn't make sense to me, doesn't mean that it can't make sense to you. Another one that's become very popular recently, and we were just talking about this during our, just in our LPP chat. The thing that I wanted to share with you guys is how many of you guys saw this? This is ticker SMCI. SMCI, there was a really good question that was brought up because if you pay attention to SMCI, SMCI used to be incredibly bullish. It was thriving when NVIDIA was beginning to thrive. And that was back in really like early 2024 when NVIDIA really began to take off, as NVIDIA had an amazing 2024. So did SMCI. But the thing that I began to notice is that SMCI sometimes almost had better days than NVIDIA, but yet it was not NVIDIA itself. It worked with NVIDIA, but I always felt that the moves from SMCI were so much more exaggerated, which again, then didn't surprise me when it came crashing down. I made numerous videos. It used to trade at $1,200 per share before its 10-to-1 stock split. And the thing that became very apparent to me is that, hey, this stock is incredibly hyped up, just as I thought NVIDIA was. But at least NVIDIA had kind of the fundamentals to back it up. It was producing these very powerful AI chips. This was kind of just its sidekick, is the way that I viewed it. Nonetheless, SMCI began to run into some issues. If you look at SMCI and their fundamentals, revenue-wise, based off of when they actually report earnings and what their projections are for 2025, they have huge projections for 2025. They're actually, if their numbers are true, and I'll get to that in just a little bit, if their numbers are true, SMCI actually produces a very large amount of revenue per year, but they almost got delisted from the NASDAQ exchange. I don't know if you guys knew this, but during this bull run, and this is the part that cracks me up, is that I think people sometimes are just new to the market. So hopefully when you see people comment about like MSTR being added to the NASDAQ 100, they're like, well, what do you mean MSTR sucks? It just got added to the NASDAQ 100. Why would they do that if it sucks? SMCI got added, right? Mara got added, but then they got removed when MSTR got added, right? And when Palantir got added. And as quick as they got added, they got removed just a few months later because they didn't meet the NASDAQ requirements, because it pumped and then it dumped. And these transitions happen all the time. It was also being investigated for accounting fraud. The accounting executive for SMCI ended up just quitting on the job. Not only its most recent earnings that it was supposed to file last week. I don't know if you guys remember this. NVIDIA was officially supposed to report earnings, and they did not. And even then, the stock still skyrocketed. They set the expectation that they're officially going to report on the 25th of February. The really wild thing about this is that this is not the first time that SMCI has done this. They've done this in the past before where they don't file earnings on time. And again, it's just a terrible look for the company because if the numbers are true, technically, SMCI should be trading at a much higher price per share. But because of this very simple, but obviously very complicated mistake of not filing earnings on time with their 10K, then again, investors get shaken up. They're like, why are you not just abiding by the rules of a publicly traded company? And this is kind of like the debate that we were having right now in our main chat room for LPP. And it's not a debate, it's just an open-ended conversation of someone was asking, how is it that NVIDIA produces 125, I think it's NVIDIA, let me pull it up real quick. I think NVIDIA itself on a yearly basis, let me look at this overview. Revenue is right around $113 to $125 billion a year for NVIDIA, correct? But it trades at a P ratio of 53.9 times its earnings. And of course, it's an incredibly bullish stock. It has a really large market cap. I mean, one of the largest ones out there. If we look at NVIDIA very quickly, it trades at a $3.4 trillion market cap. But then when we pull up SMCI, I want you to remember that NVIDIA generates about $120 billion in revenue a year. But then if we look at SMCI also, according to what they are reporting, oh, okay, well, no, never mind. They projected, this doesn't make sense because the revenue here says about 15 billion. Am I mistaken? Wasn't it this earnings or that earnings call? Did I not listen to it properly? Did they not say that they have 40 to 50 billion dollars in revenue projected for 2025? Projected for 2025 is 25 billion. I'm pretty sure I heard, is it SMCI revenue projections? Oh, that was up until for year 2026. Okay, which represents a significant growth from 23.5 to $25 billion. Okay, my apologies. So I do remember hearing the 40 billion, but nonetheless, the whole point of this is that like the thing that I wanted to prove is you guys know that I love talking crap on shitty companies, but the real part of this is that if SMCI is actually going to be producing even $25 billion of revenue, look at this. It's trading at a market cap of $28 billion. And if it's set to project $25 billion in revenue, of course, all of it's not going to be profit, but that's substantial. Like that's a very large amount of revenue for a company. Like MSTR. MSTR doesn't produce any revenue because in all honesty, they're not an actual company, right, anymore. They're a Bitcoin treasury, as they like to call themselves. I mean, MSTR produces no revenue. If anything, it loses money every single quarter. Yet, it's worth $80 billion because of its Bitcoin holdings. Again, maybe not the best example. GameStop, a company, again, maybe not the best example either. But the issue that everyone has right now with SMCI is that are they cooking their books? That has been the headline. That has been the issue with SMCI. And that's the part that's so bothersome about this is that I want to talk my crap of, hey, this is a terrible company. But if their projections are true for 2025, $25 billion is a ton of revenue. And if they're if they're currently trading at even $47 per share, which is nearly double of what they were trading at just a week ago, like that just shows how undervalued it was, all because of one reason. And that's because they can't file their earnings on time. How silly is that? Is that not just the most wild and outlandish thing? But that's why they were beginning to get investigated. And that is why they almost got removed off of the NASDAQ. Like, talk about fumbling a very successful company. Like, maybe they need a new CEO, right? Because it obviously wasn't being ran properly. And this is why I think a lot of attention came into SMCI right before it reported earnings, when it went from $25 per share all the way up to highs of $50 per share. Because if its projections are true, it should continue to trade higher. It could possibly trade north of $100 per share. It really can if its revenue is actually $25 billion a year. But if it's not true, if there is to be accounting oh my goodness, I can't say that, accounting issues, then at that point, this is why I wanted to talk about it. You might be like, well, what the heck? Why is Ricky yapping so much about this? It's not going to be this week because it's until the 25th, unfortunately. But I want to pay attention to the stock this week to see how it continues to trade prior to the 25th of February. I think with that, we can get a better understanding of, hey, based off of previous patterns, are we going to get rejected once again at $50 per share? Do you guys see this? The last time that we came back to retest, this has been a major resistance range. $50, we get rejected. $50, we get rejected. So $50 has been a very strong resistance historically. But again, patterns tend to repeat themselves. They don't always have to. So I think this is going to be a very important stock to pay attention to see leading up to the 25th, is the market consensus or sentiment bullish or bearish? Are they hopeful that they're going to file on time on the 25th? Or are they taking a step back and like, hey, like things are not looking good, more bad news is coming, and then does SMCI go from $50 per share all the way back down to $20 per share? That is why I'm yapping so much about SMCI. I think SMCI in the next 2 weeks will see a very significant move. It will be either incredibly bullish, because if they are projected to do $25 billion this year, then that will be shown based off of their most recent earnings and what they are on track for. But if they don't, then unfortunately, not even unfortunately, but at that point, a big sell-off should happen, and this should present a huge short opportunity for those that like to short a stock that's overbought and potentially ready for it to retrace. But as of right now, there's a lot of hype, a lot of bullish momentum, and we'll see how this week continues to trade. So let's see. So I traded it from 26 to 40, sold before earnings. Congrats. I mean, that within itself, a beginner might look at that and be like, well, you're an idiot because you missed out on the additional $10 per share. Dude, if you went from $26 per share all the way up to highs of 40 and you sold right before earnings because you didn't want to expose yourself to that kind of volatility, I think that's a perfect trade. I think that's as perfect as it can get, because you did a beautiful job entering when it made sense, taking profits as you made a ton of money already percent-wise, right? And you also did it in a way that, hey, I just don't know how earnings are going to go, because if you actually think about it, it didn't report earnings. And that truly should have acted as a negative catalyst for SMCI. And if I'm not mistaken, it originally did, right? It aggressively sold off and then just quickly recovered. And that's where that momentum continued, because then other institutions were talked about that they were buying into SMCI. Nonetheless, obviously, you did a very, very good job locking in profits during a very skeptical time for a company that has been very sketchy before. So amazing work on that trade. Very happy to see that. Very happy to hear that you came out on top. What's another one that we want to talk about that had an incredible earnings this past week? What about, Coin, my apologies. Coin did not. Coin did the opposite. Coin sold off, became a little on the oversold side. We'll see if it begins to recover. It was Robinhood, right? Robinhood had an incredible earnings, gapped up, and now it has maybe some pullback potential. Remember, when the hype fades, will this thing correct itself? Robinhood has been incredibly bullish, so just be very careful trying to predict the reversal on this. This is not one that I would want to trade against. This is not one that I would want to jump the gun on. Again, let price action truly show that, hey, this thing is selling off. Now I can short it. If not, I just would not touch this because this thing only continues to trade higher, at least based off of the recent time frames, right? And the other popular one was Reddit, right? Reddit originally gapped up, if I'm not mistaken. No, gapped down. I think it sold off, like 30%, nearly made a full recovery, and that's started downtrending ever since then. And I had a lot of fun shorting Reddit because when it popped up, I opened up short and then we shorted it into the lows of 200. It wasn't a crazy trade, but it was a really nice setup because, again, obviously, they actually reported pretty fair earnings, but I think their guidance was a little bit lower for 2025, which created some selling pressure. But again, it doesn't really surprise me that there was some selling pressure because the stock was incredibly overbought. It was incredibly bullish, don't get me wrong, but everything's kind of overbought. So it's kind of been this tolerance for every investor right now. It's kind of just like, well, everything's overbought. So why wouldn't Reddit just continue to uptrend? And I do agree. That's kind of like the sentiment right now. But I think that's a very dangerous mindset to have when markets can quickly turn against us, right? If Trump announces at any point, anytime this week, next week, or the months that follow, he's just starting his term. And the really interesting thing about that is that people think that this trade war isn't going to continue. It's just going to be very interesting to see how the markets react to all of his trade war debates with different countries in the weeks and months that follow. So, hey, Ricky, any thoughts on AMC? I don't, because it wasn't AMC, it was GME that I shorted, right? Yeah, GME pumped up because it announced that it was going to invest into Bitcoin, and I viewed it as another MicroStrategy wannabe bullshit company that just has cash because of its previous pump and dump, and it was just doing anything to try to make money because its underlying business is not successful, right? So I shorted that one, and I made a ton of money in a short period of time. I made like $7,000 shorting it as it sold off the following day because it pumped up to like 20% and then it sold off to 2.5%. AMC, I have not paid much attention to this. I don't like trading lower cap stocks. Do I think that this is a stock that I would want to trade? Not for me. It continuously makes lower lows, lower highs. It might have random spikes from time to time. Anytime that this thing pops up, if I was going long, I would take profits right away. If anything, anytime that it pops up, I would be more encouraged to short it because it's so consistently bearish. Now, again, it doesn't mean that it has to sell off. It just means that it has an amazing history and track record of selling off. So because of that, I wouldn't hesitate to short AMC. I wouldn't hesitate to short GameStop anytime that these stocks pump because they never hold at these overbought levels. GameStop holds a little bit better because of how much money it has in its balance sheets and it's paid off a ton of its debt. So it bought itself more time. But the actual business itself, look at the fundamentals. Look at it yourself. Don't listen to me. Don't listen to other people that try to convince you that it's a good company or it's trying to do new things. Look at the fundamentals. Look at how much money it loses every single year, how it's not growing. It's not an expanding market. It's a shitty company that simply bought itself more time. And it's okay to accept that. It is what it is, right? You don't have to convince yourself otherwise. There's so much opportunity in this market and money to be made. You don't have to be hoping for a shit company to not be shit, right? If it looks like shit and it smells like shit, it's probably shit. So let's go ahead and do one more stock. Let's do one. Okay, I like that one. I like AMD. What are your guys' thoughts on AMD? Have you guys seen the news when it came down to AMD? AMD is just getting, they reported their best ever earnings. Guidance was good. Everything, not everything. There were specific areas where their net margins, net profit was not as high as Wall Street wanted it. But when this thing reported earnings, it tanked. It went from highs of 120 to lows of 106 the following day. So, and AMD has been on a consistent downturn ever since its peak in 2024, right? So consistent lower highs, lower lows. Is AMD a stock that we want to invest in, or is it just a stock that Wall Street does not like? Long-term AMD. So I am hearing advanced money destroyer. I like that. Isn't it funny though? Like if you look into the financials of AMD, do you guys mind if we look at this very quickly? Again, hopefully it's not too much to ask. Hopefully I can earn your thumbs up. And if you want to partake in any of these live streams ever, you guys are welcome to subscribe, and then you can partake in that live chat. But very quickly, the actual net income of the company, I think that's been the really big issue with this. They make $1.64 billion net a year. They produce $25 billion, but their net income is pretty low in comparison to their PE ratio is 111 times their actual earnings. Where again, if you looked at this as a comparable, NVIDIA does not have that high of a multiple. Its PE ratio is half of that, so 53.9 times its earnings. Now its revenue is 113 billion, but again, its net income is about half of that. I mean, technically a little bit more than half of that. So you can see how impressive NVIDIA is and why maybe Wall Street naturally gravitates a little bit more to NVIDIA. Now, again, its revenue is substantially different. But I think that's been one of the big issues for AMD recently is just it's been getting absolutely torn apart from highs of 175 to lows of 106. I know technicals are not everything, but lower highs, lower lows. I know a lot of people are saying, I'm going long on NVIDIA. NVIDIA is just undervalued and underappreciated. But I think you have to dig a little bit deeper to understand why Wall Street just isn't attracted to it. It's not growing. Not only is it's not growing in the areas that Wall Street wants. Its net margins, its net profits are not growing as quick as NVIDIA is. And on the technicals, I mean, it does not lie. Lower highs, lower lows. It's literally a perfect textbook setup of a strong descending channel with lower highs and lower lows. There is no break above. There is no, we're showing signs of a reversal. So because of that, I would love to pay attention and watch AMD for a possible reversal to see if it begins to show signs of a recovery, because I do agree, like if it does end up presenting itself, there's huge upside potential based off of previous highs. If it ends up being able to gather that type of attention, there's huge upside. But again, we shouldn't be in a rush to overpay. $111 is cheap, but so was $130. And now we're at $113. So who says we can't be below 100? Who says we can't be at 90, right? Why would you be in a rush to overpay? That's a conversation that I always have with myself, not to convince myself not to buy something, but to be open-minded. I like to be kind of like my own devil's advocate of, hey, like I do think it's a good stock. I do think it's a stock that's cheap enough that I possibly want to invest in. But at least if I want to be intentional with when I decide to add, I want to add when it makes sense, not just because I think it's cheap, because the cheap can always get cheaper, right? Let me know what you think about that. So last stock is HIMS. That's actually one of the stocks that I wanted to talk about that was incredibly overvalued within a short period of time. HIMS is, I think, one of the best performing stocks. It's one of the top 5 best performing stocks of 2025 because of this huge run up that it had. It reported earnings. It was better than expected, but it's also so incredibly bullish. I think the other one was it TEM? Yeah, Tempest AI. Thanks to Nancy Pelosi. This, if I'm not mistaken, it's the stock with the highest growth in 2025 so far. I think that's not a pump and dump. I mean, it's hard to not call this thing a pump and dump. But does this not kind of remind you of kind of like a more established meme movement, like meme stock movement? Trust me, I'm not comparing these to meme stocks. I know like GameStop and AMC were much more horrible and terrible companies fundamentally. Like I've looked into Tempest AI. I mean, I don't think Tempest AI is anything interesting. If you actually look at their financials, it's all based off of projected growth and all the hype of Nancy Pelosi invested in this. It's trading at a negative multiple of negative 17.6 times its earnings. It's a company that produces $640 million of revenue a year, but loses, think about that, $743 million a year. It loses more than it makes. Isn't that crazy? But yet, do you guys know what its value is at right now? 14 billion. It was previously trading at $35 before Nancy Pelosi announced it. And again, I feel like Nancy Pelosi now understands the influence that she has. It's not her, it's her husband. But by her announcing a company that she's invested in, she did it with a call option, $100,000 worth of call options. I think she's up over 300% of whatever it is that she invested in. At that point, she would have made twice or three times her yearly salary as a politician in just one trade. The power, the influence. And in my opinion, if you were to ask me, which again, my opinion doesn't matter, that's a conflict of interest. How are you allowed to invest in companies that you regulate? How are you able to line your pockets and make money off of the powerful position that you were voted into? It just doesn't seem fair, right? Like, in my opinion, politicians should not be, and their families should not be allowed to invest. It's just, they are, it is too much of a gray area to even entertain. But Ricky, they're their own people. Why can't they be able to have their own thing going on? I think that's the sacrifice that you should be making if you want to be a politician, is to represent the people that voted you into power. And that should be enough. Kind of like a firefighter or a police officer. It's not that they have incredible pay, but it's that they have a respectable job and they do it and they serve the people because, like, we view it as a sacrifice, right? Kind of. Like, for me, anytime that I see a police officer, a fireman, or a soldier, my thing is always like, thank you for your service, right? Like, why don't we have that same type of connotation towards our politicians? Well, because our politicians are able to line their pockets, right? And it's just, it seems like you can quickly change that if you just limit what they're allowed to do. And at that point, you would really begin to filter out the people in Congress that are not there for the right or best interests, right? If their only gain was to do right for the people who voted them into power, imagine how different Congress would be. Imagine how different our politicians would be talked about as a whole. Because then at that point, they are truly serving the people, just like officers, just like firefighters, and just like soldiers, right? It would almost be like, hey, wow, thank you for your service. But none of us, at least I don't, have that type of respect for politicians because you almost view them as grimy, right? As snaky, as they're doing things to benefit themselves. So it's just very unfortunate to see that that is happening, but it's been very fortunate for those that follow her trades and politicians' trades very closely. I guess that's a conversation for another time. I don't know why that got so deep so quick, but it's just been such a common issue that I hope that under this administration, they can really put something into effect where, you know, if we're really trying to fix this deficit problem, if we're really trying to fix this problem that we have as a whole, I think a lot of it is not just by people like you and I that have no influence on these regulations or policies that are put into effect or how our money is spent, but it's to change internally how money is spent, to cut bad spending and to fix it from within. It's funny that you and I are always the people that get blamed for either not paying enough or paying too much, and we always bicker with one another. But we're the ones always paying, and they're the ones always spending or overspending or mismanaging. And again, all the blame is always put to us. So, again, it's a wild one. So, Tempest AI, incredibly hyped up stock, incredibly bullish stock because of Nancy Pelosi, and it's gathered a lot of attention since then. Kind of like a meme stock. It's a stock that you almost don't want to trade against until the hype is over. And that's just a very dangerous position to be in. Do I think that it belongs at a $14 billion market cap? No, I don't think anyone with, a very basic understanding of the stock market, seeing a company that loses $743 million would ever say this company is worth $14 billion. It just makes no sense. There's just a lot of hype. You just got to respect it, let it pump as long as it needs to. And then eventually the hype and the attention will shift to another stock. This one will come crashing down and money can be made shorting it. and then markets will correct, right? The same thing over and over and over and over again. So I'm pumped. I'm excited to see what this week has to offer. But again, of course, in observance to President's Day, the stock market will be closed tomorrow, but our live trading session will resume on Tuesday. So I hope to see you for our live trading session on Tuesday. I go live every single morning at market open for about 30 minutes to an hour. You get to see every good and bad trade I take within that live session. And if you ever want to tune on in, it's the second link in the description down below. And you can watch me for as little as $1.35 a day is what it breaks down to. It is a one-time payment for lifetime access. And right now, the second link will get you a huge discount, which again breaks down to $1.35 per day. So I appreciate your time. I hope that we're into thumbs up. And like always, let's make sure that we end the year on a green note. Take care.